NHYZE asks, furufinance, just for fun, what do you think the Hex price will be next bull run? Thank you for the question. You obviously know I don't like predictions, but for you, we could at least do something. If I'd have to make a prediction, we know that cryptocurrency is the fastest appreciating asset in the world. You have the opportunity to get in on projects at the ground floor. If you want to go into the stock market and pick stocks, while yes, you can do your research and you can find those companies that you believe will do well because of the product or services that they offer, as well as the management and the balance sheet and the statement of cash flows and things like that. But you will never get the returns you get on a good cryptocurrency project because you are still 10, 15, 20x behind the venture capitalists and the seed round participants. But that is changing. If you look at Bitcoin, since its inception in 2010, 2011, it is the fastest appreciating asset. But over the past 4 or 5 years, there are many stocks that you could have picked that outperformed Bitcoin because of the law of diminishing returns. The more of something you have, the less you need of it. So more people bought Bitcoin. So since they bought Bitcoin, they don't need Bitcoin as much. Same thing applies with Ethereum, although its returns have not diminished as much yet. For the cryptocurrency sector in general, the venture capitalists are now entering the space. You have several companies that are participating in seed funding where they are getting a 10, 15x up on their retail participants. Also, most cryptocurrencies are not going to make it. The greatest historical comparison to the previous bull run would be the dot-com bubble. During the dot-com bubble, the internet was emerging. It was a technology that most people did not know really what it was capable of, but they knew it was disruptive. They knew it would cause a paradigm shift in how the world would operate. It was a magnet for new money, and due to the low liquidity, products just shot up. But obviously, most of them couldn't make it because they could not generate earnings because people just didn't use the internet. And if they couldn't generate earnings, they couldn't make payroll. They had to dump their shares, and eventually people just stopped investing and they went bankrupt. But like I keep on saying, good projects do well over time. The best companies that people stuck with outperformed pretty much every other asset class. And I think the same thing applies in cryptocurrency. What constitutes a good project? One would be product market fit. It has to provide a good or a service that benefits you. With crypto, we see that there is product market fit for Bitcoin, regardless of how you classify it, whether you want to call it a store of value or a speculative instrument. Same thing with Ethereum. You see DeFi, you see NFTs, you see smart contracts, and obviously decentralized exchanges. And then it's got to have game theory. The game theory, what has the Bitcoin happening and obviously the Hex T share shown us? It has shown us that you can program currency to do well over time. Not only does it rely on buyers, but it can actually outperform competing products with the same liquidity and the same market fit by adding game theory. Another thing is the token distribution. That's another thing that has led to these insane valuations. The Bitcoin, Ethereum, SHIB, they do not have companies behind it, right? They do not have overhead. In the case of growth companies, meaning companies that don't have earnings like Rivian, like Palantir, the way they pay for their operation is by dumping these shares on their balance sheet for cash, as well as issuing new shares in order to raise money for the operation to work. And the reason why they do not perform as well as cryptocurrencies is because they need to be dumped on the market to maintain the operation, to make payroll and cover expenses and things like that. That's one. And two is venture capitalists. They are ahead 10, 15x on retail. They are also running an operation. They have to pay for their operation. They have to pay for employees. They have to pay salaries. They have to pay rent. So being that they're up 15x on the retail and the project went public, they can just dump their shares to sustain their operation. So that wasn't the case in crypto until very recently. And now you kind of have the same thing. These new crypto projects, these new blockchain projects like Flow, Costa, Arbitrum, they may or may not be good projects. You could do your research, but there is venture capital in there. So that prevents retail, that prevents the people buying on Coinbase and Binance from getting the astronomical returns that you could have gotten in Bitcoin and Ethereum. Hex, Pulsechain, and PulseX have the ability to outperform not only the real estate market and the stock market, also the broader crypto market as well. Because one, they have product market fit. The markets have spoken. Bitcoin, store of value, speculative asset, whatever you want to call it. Richard Hart has created Bitcoin 2.0, essentially, an improved Bitcoin, which puts the holders, the people that hold the price up, the people that don't sell, it puts them first. It rewards them the most. Case of Ethereum still is an excellent project with product market fit, but it has problems. The biggest problem is the gas fees. Pulsechain solves that. Pulsechain has all the projects that Ethereum has with very, very low fees. PulseX obviously is the decentralized exchange for Pulsechain. Also, in the case of these projects, there is no overhead essentially because Richard Hart is a multi-billionaire. He retired when he was like 23 years old. He also got in cryptocurrencies like Bitcoin and Ethereum during the time when the most gains were to be had. He does not pay for marketing. He does that all pretty much himself with the outrage marketing. The only overhead I could really imagine are the developers, which he pays for himself. The proof of that is that the origin address has not sold any of its hex in over 3 years. There is also no venture capitalists that get in ahead of you, right? When he wants to raise money for a project, he goes straight to his community, which has made him a benevolent founder. He does what is best for his projects and for the price of his projects. He has stated that the most important thing in crypto is the price. So based on the fact that Hex, Pulsechain, and PulseX are great projects. Their founder has a proven track record of great price performance and benevolency. There are no VCs ahead of you. They have product market fit as well as the game theory. Richard Hart is the first crypto founder to really talk about game theory and really come up with good game theory as displayed by the previous price performance, the price performance of Hex, which did a 10,000x in under 2 years. There is no company behind it that requires marketing, that requires overhead or salaries and expenses. Price prediction for Hex, Pulsechain, and PulseX. Price predictions, they sound sexy. Everyone wants to hear that their bag is going to be worth a certain amount within a certain time, but in the long run, it is a bad look for the project, and it is also a bad look for, my integrity, because obviously the odds of being correct or even close to correct are pretty much zero. But based on the fact that cryptocurrency is the world's fastest appreciating asset, leads me to conclude that while we don't know exactly what the price is going to be, it is extremely likely that being that Hex, Pulsechain, and PulseX are in the market of the world's fastest appreciating assets, they have product market fit and they are superior to every other cryptocurrency in terms of game theory and in terms of putting the retail investor first. It is likely that they will outperform every other cryptocurrency and therefore every other asset, including stocks and real estate. Not financial advice. Do your own research. It is important to note that we are still in a tight monetary policy environment where the feds are tightening. While I personally, not financial advice, believe that these projects will outperform everything, that does not mean you should be stupid and put all your money in at once. You should still buy less risk on investments, including index funds, max out your Roth IRA or your IRA, and you should dollar cost average into crypto. While I strongly believe that these projects will do well, we just don't know when and what time frame they're going to do well. And obviously don't invest more than you could afford to lose. You should have enough cash to support yourself. So NHYZE, thank you for your question. I hope this satisfied you, although I couldn't give you an exact prediction. If you enjoyed this video, please make sure to like, subscribe, and please follow me on Twitter. And until then, we'll see you next time. Thank you.